Ali, thanks for coming on the show, man.
Thank you for having me.
So we're going to do the full intro and get to understand what your company does, Crescent Crypto. But I want to really just kick things off by talking about your background. You worked at Goldman Sachs for a long time, and you worked, I think, in venture capital as well. What attracted you to the crypto blockchain space in the first place?
It's a very good question to start. When you put it that way, crypto is really the marriage of finance and technology. Something like blockchain, Bitcoin specifically, is truly one of the first iterations of combining my expertise and my background working at an asset manager like Goldman Sachs, as well as the skills I picked up in venture capital. And I truly found a home within crypto. I was an early writer about it, really got involved in the space, saw a need in the market, and there were a few people at the time who could articulate what it was and how to get involved, and very few people at the time who can even convince people to get involved. So
yeah. Where were you writing, by the way? On a blog or something? Or?
Yeah, I was actually, the first thing I wrote was at a firm. I was with Fairview Capital Partners, great firm. I wrote a paper called The Rise of Blockchain, and really cemented my ideas of what this place was going to do and how we should be involved as a firm, and dug my heels in and decided that that's the career path I wanted to take.
That's amazing. All right, so we'll go into all of that in a minute. I do want to say we're here in New York, where you're based, your company's based, and we're being hosted today by Listing Party and Canal Street Market. So thank you for hosting us today. So today's conversation, look, we're in mid 2019, right? We're seeing a huge surge again in the price of Bitcoin. The news and the press around it is heating up again. It feels like a little bit early 2017. And I don't know if, people listening to this, the people that know me, know I got really into this several years ago, but in 2017, everyone kind of caught the bug, right? Like whether that's the person you get your haircut from, the person delivering something to you, or your teacher at school, like, or your parents, right? There's someone asking the question like, what's this thing crypto? What's Bitcoin? What's blockchain? And as someone who comes from a technology background, that's kind of what, that is something that attracted me to it in the first place. But I won't lie, like the price of something going up, of course, is something that's going to catch your attention. And some of my friends and I joke, but around, Christmas time, I think it was 2017, everyone, we were at home texting each other saying, oh my God, it's getting to 20,000. And, it takes over. It's like the gambler mentality a little bit in my head. But that was something that was definitely driving the market. And what we wanted to do today was, peel back the layers and say, okay, what is this technology? What is this application? But not just overcomplicating it, going into all the technical details, because we would need to be here for 5-10 hours for that.
You need someone way smarter than me for that as well.
But what I really wanted to focus on was really two things. So the first is just really explaining things in simple terms. I found you because a previous guest of this podcast, Cenk Uygur from the Young Turks, posted a video of you on his network. And I saw you really beautifully, simply articulated blockchain and cryptocurrency in a really simple way. And I thought there aren't too many people I've seen that do it like you. So that was one of the reasons I reached out.
I appreciate that.
Yeah. And the second thing is, beyond just simply explaining what it is, I really want to understand, as a normal person, a common person who doesn't work in finance, who say I'm not a real technical person, like, why should I care? And what are the real use cases of a technology like this? Or is it just going to be something that people invest in because one day they think it might be worth something? So those are the two focus areas for this conversation today. And, why don't we let's just get straight into it, man. Like, blockchain, Bitcoin, all of these different terms, like, what is the simplest way for you to describe what the blockchain is and cryptocurrency?
Sure, Bill. First of all, thank you for having me.
Yeah,
it's an honor to be here. If we can accomplish even half of the focus for this conversation, I'd be really happy. The goal that I have is to educate your listeners on what blockchain is and what Bitcoin specifically is, the first application, the first use case of a blockchain. At the highest level, at its most simplest term, a blockchain is a ledger. And we'll get into what a ledger is, and you're going to ask me, what is that? And most people know what a ledger is, they just don't know. The problem we have in this industry, in this asset class, and I imagine with your listeners and the people I know in my family and friends as well, people you were having your conversations with around Christmas time is people like me who speak, who are, for lack of better words, thought leaders, as much as I hate that word, tend to complicate things beyond what they need to be complicated. And it's for many reasons, but oftentimes it's self-serving. If it sounds more complicated, it makes me sound smarter than I really am.
Yeah.
So the goal today is to make it as simple as possible. So we'll dig right in. What is a blockchain? A blockchain is a ledger. Most of us know what a ledger is without even having ever interacted with one directly. You think only accountants and finance guys know it. No, everyone does. Can I ask, where do you bank? What bank do you
Chase.
use? Chase Bank. A lot of Americans use
Yeah.
Chase in this country. Most people don't really know how a bank makes money, but it's very simple. They maintain a ledger with your account, Bilal's account, a ledger with my account, and a ledger with every single person, every single client of theirs. This ledger has a series of credits and debits. What that means is when Bilal wants to send Ali $10, Chase goes into Bilal's ledger. They say, okay, how much does Bilal has? All right, he's got 100. We're going to do a debit. We're going to subtract 10 from Bilal's ledger. We're going to go to Ali's ledger. We're going to do a credit. So debit Bilal $10, credit Ali $10. That's at the height of it. That is at its most simple core. That's what they do. They do that for you, for me, for companies, for countries. These banks maintain ledgers. And they get paid a lot of money to maintain these ledgers. And money that we don't often think about. They get paid wiring fees, credit card fees, ATM fees. They take your money on that ledger, they lend it to other people, they make interest on it, and they sometimes pay you a little bit. Chase isn't paying you or I very...
0.1%?
Yeah, so they actually make a lot of money for maintaining this ledger as a service for us, and that's what's called a centralized ledger. Blockchain is just a ledger. The only difference between what Chase is doing and what Satoshi Nakamoto, who is the founder of Bitcoin, decided to do, he said, let's take that same ledger that Chase has, and let's give one to Bilal, one to Ali, one to every single person who's operating on this network. We'll call them miners. Every single person will see this ledger. And now if we want to do that same transaction, this time we'll say Bilal wants to send Ali just one. We'll say 1 Bitcoin from Bilal.
Yeah.
So every single person on the network, every single one of us will take a look at our ledger. We'll go to Bilal's account and we'll say, does he have enough Bitcoin in there? Okay, Bilal has 5. So we'll subtract, we'll debit 1 from Bilal's account and we'll credit 1 to Ali's. Instead of this happening at one central ledger, which is JP Morgan Chase, every single one of us does this at the same time. And then it gets confirmed. And now your account has 1 less Bitcoin and my account has 1 more Bitcoin. That at the core of it, that's all it is. Now, there are obviously additional layers of encryption, security, costs, and transaction, but all a blockchain is, it's a simple ledger, a distributed ledger. Oftentimes you hear distributed ledger technology, DLT. It's all it is.
So what when you say distributed, what does that mean for, how is that different to what Chase is doing?
Yeah. So right now, when you want to send me money, you communicate with Chase, or I communicate with Chase, and we say, "Hey, send Ali $10." So you're sending it to one entity, one central authority, and they are responsible for sending that money. They may send me the money. They may not send me the money. It could be after 5 p.m.
Okay.
It could be a weekend. It could be a holiday. They may have a bigger entity like a government might tell them, wait a second, you cannot send Ali money. He's on a restricted list. Someone might say, you can't do business with that country. A judge might say, wait, no, your assets are frozen. Bilal, Judge XYZ said, Judge Judy said Bilal can't move his money around. So us as Chase, we're not going to allow you. They have control over that ledger. They are a central authority. They have control over your money. What Satoshi Nakamoto did, and the beauty of Bitcoin, which is what you're getting to, is because it's decentralized on the Bitcoin network, if you wanted to send me 1 Bitcoin, there is no one entity that controls that asset for you. It exists everywhere and nowhere.
So decentralized meaning it essentially lives on thousands and hundreds of thousands of computers, essentially. Are they called nodes or,
That's a good way to think about it.
Around the world. So
Exactly. And how would you stop that? Like let's use that same scenario again. Judge Judy says, wait a second, Bilal is a dirtbag. He's not paying his child support. How could, not that I'm advocating people not to pay their child support, but that's a great guy.
Yeah.
There is no chokehold. There is no one entity. That judge would essentially have to control those thousands, if not hundreds of thousands of ledgers in order to allow.
That makes sense. Okay, but I guess and I'm going to do this continuously through this conversation, which is to play devil's advocate.
Please
and
do.
Try to say like, okay, but if I'm a regular citizen who has never had an issue with sending a payment, let's say using Zelle, like Quick Pay
Zelle,
Zelle,
yeah.
which I use through Chase, or many of us use Venmo or something like that. Right, like I've never really personally had any issues with that. Living in the States, living in the UK, where the two and Ireland where I've lived. So, like if I'm one of those 300 million people, or potentially billions of people who have never had that issue, like why should we be concerned with that in the first place?
Very good question. The truth is, you wouldn't be, and you shouldn't. We have really great banking infrastructure in this country and in the UK. The problem of the unbanked, which we'll touch on later, that hasn't really hit us. We are fortunate. I was just speaking to one of my colleagues yesterday. What we don't realize is you and I are among the most fortunate humans in the history of humanity.
Yeah,
the
true.
1% of 1%. We have access to everything we need, including banking. The infrastructure works. But for the majority of the world, and for the majority of the history of the world, those rails didn't exist. There was no parallel option for someone like us in another country to be able to send that transaction. So the use case today isn't necessarily deemed perfect for you and I because we have access to Zelle, but it is perfect for people in countries like Venezuela, like Argentina. Very interesting fact that your listeners might like. At the height of Bitcoin, you mentioned December of 2017, right? So December 17th, 2017, Bitcoin reached almost $20,000.
Yeah, I remember.
At that same time,
Yeah.
if you had Argentinian pesos, if you took those Argentinian pesos, every single Argentinian peso you had, and you bought Bitcoin, you would have lost less money than if you had held on to your Argentinian peso. Yeah. And that's a crazy thought. And we're talking less than 2 years, you've wiped out almost 60 to 70% of the value of your entire country's currency.
But what about if they had bought US dollars, right? So, or pounds or something like that. So, because I get the point there, but just like, there are more stable currencies in 2019, maybe in 2025, maybe not in 2045. I don't know.
Very good question.
So, and as a basic economics, my understanding of economics is I did it at university, but supply and demand is a big part of the price of a currency and any asset. But there's a lot more that goes into it behind that. So, like, why should I use Bitcoin in that scenario versus a US dollar?
Very, very good question. The truth is, you wouldn't have been able to purchase a US dollar. So the Argentinian government and most of these governments that are facing hyperinflation and economic downturns, they make it near impossible to exit those fiat currencies by design, because that would exasperate the problem. If every single person was dumping their Argentinian peso for US dollars, it would hurt even further. So capital controls make it difficult for you to pull money out of banks. It makes it difficult for you to operate your businesses. It makes it difficult for you to accept dollars. It makes it difficult for you to send money out of the country. So unfortunately, although it would have been, it probably would have been more economically sound to get out of the Argentinian peso and purchase the US dollar, it wasn't an option for most people. And you see this issue over and over and over again in countries. And for the first time in the history of our humanity, you have an option that's slightly different, that is difficult to regulate, is difficult to control, is difficult to censure. So anti-sovereign censorship is one of the core tenets of Bitcoin.
Yeah. Okay. So let's talk about. You gave an example of Chase Bank, right? Which is a bank that anyone gets access to.
Great bank, by the way. We shouldn't just.
Yeah, I switched in the part. They don't sponsor the podcast, but after this they might. But no, I have to say I used several other banks in the US, and I ended up switching because they were a lot easier to use. And actually, related to this, their experience on their mobile app, on their website, is actually the best I found. And if you just think about this, relates to this because it's all about usability, right? And I think if you talk, for most of my career, I worked with traditional companies, Fortune 500 brands and startups, but mostly established businesses. And they would spend hundreds of thousands of dollars on, or millions of dollars on their storefronts and their logo and their branding and all this sort of stuff. And then you'd go to the website where 50%, 90% of their customers are going to go where they're actually interacting with that's essentially their user experience, right? Like I don't go to a bank that often anymore, but the website is how I interact with the bank. And most of the websites are so bad. And it's just, the reason I bring that up is because the user experience for something like this in its current state, cryptocurrencies, let's say Bitcoin, you own a bunch of Bitcoin, is still very early, obviously, right?
Yeah.
So if someone's listening to this, they want to buy Bitcoin, they can sign up to Coinbase or one of the Gemini, one of the big exchanges, and they can put US dollars and exchange it for Bitcoins, and they can store it in there, or they can take it offline and put it in a wallet. So that is still very early, right? Like, maybe in the future there'll be the equivalent of a Chase Bank for those people. But at the same time, I guess it takes away from the fact that the whole point of this is it's supposed to be decentralized. So if, I've heard you talk about storing Bitcoin and cryptocurrency offline. Is it called cold storage? Is that the right term? So that, for someone who's listening who's never heard of that, that essentially means you take your address, right? The equivalent of your location on the blockchain that has Bilal's 22
Bitcoin.
Maybe not 22, sorry.
You probably did.
And we can take that off and store it, right? So can you explain how that works? Because we've talked about wallets a few times already here, and we've talked about the experience. I just kind of want to understand, for people listening, to understand like what is a real user experience right now and what should it be like in the future.
So the real question that I think you're trying to get to is adoption, right? If cryptocurrency, if Bitcoin is as good as I say it is, if it's going to solve all these problems, and let's just speak pie in the sky for a second. If it's really going to do this thing, it's not possible unless it's easy for Americans, people in the UK, people all over the world to interact with this blockchain. And today, that's not the case. It's extremely difficult. The analogy I like to give is early 90s, mid 90s of the internet. Now, if you had come to me and you said, wait a second, no, the internet, look at this. How can I use this? Look at this user interface. Who's going to adopt this? My mom doesn't know how to code. My mom is never going to know how to open up a blockchain wallet and send an address and find her location. Most people say, yeah, you're right. But how wrong would we have been? The use cases, the UI, UX, the availability of tech solutions that make it simple for us as humans to interact with the blockchains are coming. And we're seeing them every single day. Companies like Coinbase, companies like Circle, TagoMe, all over the world. Entrepreneurs like myself are making it easier to interact. The concept of cold storage is somewhat unique. It's this new thing that's really only happened in cryptocurrencies. Fact is, everyone wants to be their own bank. Everyone wants to be decentralized and anti-censure and anti-government until they have to be their own bank. Until you realize how much work your bank really does. Chase really secures your assets, right? There's insurance. There are so many things, so many safety nets that we're used to. If someone steals your debit card, you're fine. If someone steals your credit card, you're fine. If you accidentally send somewhere, you're most likely going to be able to get it back. There are lots of guardrails in place today that these banks do for us. And if we're talking about moving away from the centralized solutions and into these more decentralized solutions, you're going to have to accept that you're going to have to do some of that work yourself. Yeah, you might not be paying those fees that we talked about earlier to these banks, but you're also not receiving those services. One of those is storage. Cold storage is really the function of maintaining your location on your access, the key to your location on the blockchain, safely away from the internet. So these assets, they exist everywhere and nowhere, like I said, right? They exist on a ledger. In order for me to receive money from you, to receive a Bitcoin for you, I give you what's called a public address. We'll keep it very high level. Anyone, you can know my public address, and you can send me Bitcoin to that address. Anyone can know that public address, and anyone can send to that. But that doesn't necessarily mean that you can pull Bitcoin out of that public address. It has what's called a private address associated with it. As long as you keep that private address off the internet and generate it in a way that is secure and has never touched the internet, without getting into too many details, then it becomes nearly impossible for someone to steal your Bitcoins. Now, there's also always the risk that you might lose that private key.
Which happens a lot.
It happens to a lot of people. You might, God forbid, pass away and have never told someone where the private key is or how to access it. So there are other concerns. There's two sides to the coin, but the truth is the blockchain.
Pun intended.
The blockchain itself has never been broken. Bitcoin has never actually been hacked. When someone loses their cryptocurrencies, when someone loses their Bitcoin, which you and I hear about all the time, has nothing to do with a hacker getting into Bitcoin. It was usually user error. Their private keys or the private keys of the person they left the crypto with.
Which might be an exchange. Like
an exchange.
Mt. Gox or one of these big...
Binance almost recently. All the exchanges have faced hacks because you've allowed them to maintain it's their private keys. They're just holding it on your behalf. And they're a much bigger target than you and I. A hacker, who's going to try to figure out how to bypass
You don't know how much
security
Bitcoin I have. No,
got 22.
No, but okay. Well, thanks for explaining that. I think, we could probably spend a lot of time defining all these terms. So what
Yeah.
I'll do is, as we continue through the conversation, if there are more technical terms that come up, I will ask maybe to define them in a simple way. But I guess, and I kind of asked this before, but just to make sure I clarify, right? Like you talked about the benefit of using a Chase, the benefit of using, all the insurance that comes along with that system, right? Why, a lot of the cryptocurrency community came from these markets. Like, of course, it's all over the world. There's people working on this from every country in the world, I'm sure. But a lot of we don't know where Satoshi Nakamoto came from, technically, I guess.
He, she, they,
exactly. But, I don't know the numbers, but, there are a lot of people in the US, let's say, and the UK, two markets that I know, that are still really interested in this. And to me, I still don't fully get, like, what's the benefit for them, right? So I'm not discounting all the people working in Venezuela and Brazil and any other country in the world that has been contributing to this. But just as someone who's coming from these markets, I still don't fully understand, like, why anyone here should really care.
Sure.
You know?
We talked about the use case for international people who are afraid that their governments may print more money, may hyperinflate their assets, and that's one use case. But what does that necessarily have to do with you and I in the U.S. and the U.K.? There are specific use cases that are very important to myself as an investor. Right? You and I have access to or exposure to a significant amount of U.S. dollars. Historically, there was no way for me out of that risk as just a normal everyday guy. Right? If there was some sort of trade war, if there was some sort of tariff issues, which we're experiencing today, if there's some sort of interest rate issue or GDP crisis, we're talking about quantitative easing now and the effects of getting out of quantitative easing. We have historically not had the option to opt out. Whatever was happening in the economy, if I'm getting paid in dollars and I have US dollars in my bank account, I have to accept those effects on my wealth and my ability to purchase value in the future. Bitcoin gives you and I, the same way it gave the Argentinian person a way to opt out of their system, it gives me and you for the very first time, I don't know what's going to...
A glimmer of hope to even have that.
Who knows? Maybe Bitcoin is risky, and maybe, the effects of leaving quantitative easing in the U.S. are going to be risky, but... I want to opt out.
Could you explain it? Because I know a little bit about that, but just for someone who's listening, like, what is quantitative easing? Because it is actually, the concept of a central bank and printing money. Like, these are terms you hear in random videos and someone who might mention it, but like, why is that an issue? And the history of that, right? Like, that hasn't happened forever. The U.S. government didn't just used to print as much money as it wanted.
Yeah, so let's backtrack a little. We can discuss quantitative easing and how we got there. Central banks, let's talk about the U.S. for a second, are mostly responsible for setting the interest rates that all these other banks, and by definition, every single one of us is using. So whether you want to buy a mortgage, buy a car, buy a house with a mortgage, buy a car with a note, you are affected by the central bank's interest rates. In order to increase that interest rate or decrease that interest rate, they have many mechanisms and levers. After the 2008-2009 crisis, a lot of the countries in the world, specifically in the US, decided to bring interest rates down to make it easy for the economy to grow, at the simplest terms. One of the ways they did that was by purchasing a lot of assets, putting on their balance sheet a lot of assets, pulling in assets from the market onto the Fed's balance sheet allowed it to decrease the interest rate.
What does that mean in terms of, like, what assets? What are they buying? What are those assets?
Bonds. So treasury bonds usually. That's the most common asset that the Fed would buy. So they go to the U.S. government and they say, we wanna buy your debt. You print money. We're going to allow you to increase the monetary supply, and we're going to have that debt. And that's going to make it easier for guys like you and me to be able to buy a house. There's more money.
So the central bank is going to the government, but they're connected though, right?
Yeah. So a lot of people don't realize this, but the Fed is technically a quasi pseudo governmental organization. It's not a government entity.
Yeah. Okay.
It truly isn't, and that's
There's
that's
a special relationship.
There's a special relationship. That's a topic for a whole other podcast.
But the reason I bring that up is because when I've dug into this in the past, when you watch a video on YouTube that said like, why Bitcoin? Why should we even care? This is exactly it. Like a lot of people say, do you even understand how the money supply works? Do you understand that we are essentially printing money to then lend out at, because money is essentially cheap right now, interest rates are low, and that, I guess, is the reason I brought that up, is because it feels like if we were to have another 2008, if we were to have another, crash or whatever else it might be, or trade war, like you said, I guess the principle here is really about taking control of your own money.
Yes,
right.
That's it.
And that's what I think has attracted a lot of people early on, conceptually anyway, philosophically, whatever you want to say. And I guess what I would say to that is, I really love that concept. That's kind of what drove me to learn about this in the first place. But right now, if you think about the value of a currency to a normal user, as someone who's spending money, being paid from their job, like there's a few things they need, right? Like they need to be able to go and pay the taxes, first of all. Uncle Sam's wants to get paid every year, of course. Then they need to go and buy the groceries, pay the mortgage, give money to the kids, put money in the 401k. And at the moment, we're not in a place where you can do that with cryptocurrency. So, do you feel like this will require, in the longer run, development of all of those alternatives? Or does it have to just mean that we're going to have a system where cryptocurrencies and blockchain are interacting with the government in that way?
Yeah. I think both of those answers are right. And this is the cop-out here. Right? The part of me, and part of the idea behind cryptocurrencies and Bitcoin specifically is this anti-sovereign way to opt out fully from the system. What a lot of people have learned is that's unfeasible. The system is entrenched. There are so many great ways that these two systems can interact with each other. So it's not necessarily Bitcoin over US dollar. You'll need both. And the US dollar is very great at things like paying your taxes. Believe it or not, there are some states in the US now that are starting to accept Bitcoin for taxes, but you can't yet do a lot of that. You can't really buy groceries with Bitcoin. It's getting easier and easier, and in time it will. Second part of that question is, do I really want to buy things with an asset that's so volatile? Do I want to buy things with something that could raise in value? The answer is no. Does a vendor want to sell me something with an asset that can go down in value? The answer is no. So Bitcoin as this anti-sovereign, as this way to opt out of things like quantitative easing, which we didn't really discuss. We talked about how the government brought the interest rates down.
Yeah.
Now, I think the interest rates are near zero, and in some countries, they're negative interest rates, right? That's not going to last forever. And we've never, as humans, ever experienced the other way, going from zero or negative back to where they have been historically. We've never experienced that. It's an experiment that we haven't yet experienced.
And just one thing to interject, you mentioned that this can't go on forever. Well, why can't it go on forever?
Yeah,
just because of the debt.
You can't go any lower, right? So we've artificially decreased rates to zero in the U.S. and then negative in some countries in the EU. It's just unfeasible that we can go lower, and it's unfeasible that we would stay at this level forever. Interest rates tend to ebb and flow, but there is a mean. Most economists will say that it will eventually get back to the mean, and my point is we've never experienced that. And we don't really know what that's going to do to the value of assets. We don't know what that's going to do to the stock market. We don't know what that's going to do to bonds. We don't really know. It may be good, maybe not. But for the first time, I can say I opt out of this social experiment. I don't necessarily know what's going to happen, but you know what? I don't want to take all the risk, not all of my US dollars. I'm not willing to risk it all on this experiment. I'm willing to maybe take additional risk or separate risk on Bitcoin and blockchain. I want to opt out, and it's kind of exciting that you have this ability to express that view.
Yeah, I get that. What about if you didn't believe in, let's say, the U.S. economy or the way that it's being run in its current state, or you're just hedging your bets? Like, what would be the benefit of buying like a Bitcoin or putting a percentage of your assets into Bitcoin versus another currency? And we've probably already used this term fiat currency, but for people listening, that essentially means I guess, the traditional currencies that we are using around the issued by governments.
One, I would never bet against the U.S. economy. That's a sucker's bet. You just over time, the U.S. economy has come through and through, and capitalism, the way the U.S. economy works and the way capitalism works, where we give money, we give value to these companies, and they do something greater with that value, and in return some value to me. That has worked, and I'm not in the business of betting against that.
Yeah.
Now, obviously, there are growth periods and down periods. The market is very cyclical. Cryptocurrencies and Bitcoin is totally uncorrelated. It has nothing to do with the revenues associated with a company, nothing to do with the GDP associated with a country, nothing to do with the interest rate in a country. It's totally separate. So to answer your question, why would I invest in something like Bitcoin? Because I want something that's uncorrelated, something that will behave differently in my portfolio. Modern portfolio theory would make the argument that a truly uncorrelated asset is a really great addition to your portfolio.
Yeah. So you're saying, so for example, if I said I need to diversify and buy euros or buy pounds or yen, you're saying that still has something to do with the dollar.
Yeah,
if there's a big trade
war,
if there's, and that's what you're saying. So it's not correlated to the macroeconomic environment in the same way other currencies are.
I couldn't agree more. Like if you're truly thinking about diversification, a lot of these fiat currencies, right? And that's a term you mentioned. It's a term that just means non-digital currency, right? So these are currencies issued by central banks of different governments all over the world, and they are not the core of this conversation. They're literally the opposite of this conversation. If I wanted to diversify out of my U.S. dollar exposure, I would either purchase things historically like gold.
Yeah, I was
commodities,
just about to ask about it.
Oftentimes real estate in other countries that are not denominated in U.S. dollar. These are all good things, but somewhat or relatively correlated, and they all have their own pros and cons. Liquidity, how easy it is to purchase, how easy it is to sell. Bitcoin is the true uncorrelated asset that I can purchase, that I know I have the ability to move anywhere in the world very easily at a very low cost, and I can sell it very easily for whatever else that I want.
So you mentioned stability there, and you mentioned gold standard. So I know, and we won't go into all of the details, but one of the 4 criteria I heard you mention that you guys essentially manage a fund that you're passively investing in cryptocurrencies. And one of the 4 criteria is that it shouldn't be pegged to something, whether that's a US dollar or gold or something like that, right? And that kind of begs the question, because for many years, we had a currency that was pegged to gold standard, right? And again, we'd probably spend many hours discussing the pros and cons of that approach. But I guess if the end result we're trying to get to is a usable currency that has some form of stability, like, doesn't it need to be potentially pegged to something?
That's an interesting idea.
Or how else can it be artificially kind of kept at a certain, variance, I guess? Because right now, like, the price of Bitcoin has gone from almost 20,000 2 years ago to, I think,
8,500 right
85 right now, and it was the lowest was probably like 4, or I forgot the number. So in 2 years, that's a significant increase and decrease. So if this was ever to be a usable currency, like, isn't that one of the most important criteria?
Yes. So the misnomer of cryptocurrency is one that we struggle with every single day. Bitcoin, in my opinion, is not a currency. I would look at Bitcoin more as something, like you said, as gold, right? So something that can be used as that flight to safety, and less as a currency that should be used for transactions. Now, this is an opinion that is, it's a very split opinion in the industry. But in my opinion, Bitcoin should be viewed under the same lens of what we use when we think of gold.
Yeah.
You mentioned the gold standard and how the US dollars were pegged to the gold standard. We haven't had that in a very long time. Most people don't even know where gold comes from. If I asked you you have any idea, just throw a guess out there.
Gold mines?
Yeah, well, a very smart person explained this to me. The Earth doesn't produce any gold. It's one of those rare minerals that the Earth doesn't actually produce it. So all the gold that's available today, every single gold you've ever seen on someone's neck or someone's finger, came to Earth from space. Meteorites. Every single gold.
I can't believe I didn't know that.
Literally,
I feel
it
so
has
stupid.
all come from space. So it's this magic space rock that we, over generations of humans, have assigned value to, and we said, "This is rare. There's some value here. We will use this as our store of value." And over years, we've accepted it, and we've all accepted that it has value. But like Bitcoin, in fact, even less than Bitcoin, it has even less utility. The overwhelming majority of gold in the world is not used for jewelry or for technological components.
For rims.
It's not.
No, you're right.
It's used for the store of value, for investment, for speculation.
Bullion, like just straight blocks of gold.
And I believe it's around a $7 trillion asset class today. So the argument for Bitcoin is, if we start to look at Bitcoin within that same lens as something that we assign value to, something that is actually rare, we actually produce more gold every year. Every single year, the technology is getting better. We're being able to pull more gold out of the ground. Bitcoin is the opposite of that.
Because it's a finite.
Not only is there a finite amount, but there's a concept called the halvening. So every few years, we produce less and less Bitcoin per year. So it's becoming rare. It's becoming more rare. And not only is it becoming more rare, we discussed, you and I, where people die and unfortunately, forget their private keys. People lose their private keys, and those Bitcoin get locked up in those addresses forever. So not only is that a finite asset with only 21 million, it's truly deflationary, where we're getting less and less of it every year. And that's an exciting concept. We've never once had an asset that's getting rarer that you can purchase today. So from the perspective of those who invest in gold or view gold as a store of value, the argument that can be made that Bitcoin is a better store of value, it's easily transferable. If you wanted to transfer, I don't know, a couple of kilos of gold, it'll cost you an arm and a leg. You need a security force and lots of insurance to do that.
You don't send that in UPS.
Yeah, and then the opposite is true. If you wanted to buy a slice of pizza with gold, you're not going to sit there and like carve off a piece of gold at the pizzeria. It's not possible. Bitcoin does both of those things. You wanted to send me 100 Bitcoin, 1,000 Bitcoin, pretty easy to do. You wanted to send me 0.0002 Bitcoin to buy a slice of pizza, also pretty easy to do.
Yeah. So, and that's first of all, thanks for enlightening me on the space rock. I didn't know
Magic
that.
Space rock.
Who told you that, by the way?
My partner, Mike Hazley, very smart guy. He's
the math dude?
He's the math guy, Cornell math guy, very smart guy, one of the smartest people I know. And he's made that analogy before, and it's really struck with me.
I remember when I studied economics at school, even before college, my economics teacher talked to us about why there was even an argument to have the gold standard. And I think, again, correct me if I'm wrong, but one of the things I remember was something along the lines of, there's a certain percentage that's discovered each year. And that was, I think, let's say between 2 and 5% or whatever that number is. And because that's a stable amount of money, which is essentially like a good target for inflation in an economy, that's why I think people had said, oh, well, if we keep getting it at this amount, then there's an argument to be made why it should be pegged. You can't just print as much money as you like.
Yes.
Right? But I think what you were you were talking about there is that right now, because it's early, Bitcoin is going up and down. But is there an argument to be made because of its finite nature and because of the fact that there's only a small amount being essentially released in the same way gold was discovered, that there is a way to kind of
get to equilibrium?
Exactly.
Yeah, really, very good point. You're asking very poignant questions. So the argument that I make is right now it's very volatile because speculators like myself and the majority of those purchasing Bitcoin are getting rewarded for the risk they are taking. It's a risky asset, extremely risky. Typically in economics and portfolio management theory, the more risk you take, the more you expect to be compensated. So because it's risky, I'm taking a lot of risk, I get compensated for it. And I could also lose a lot of money. That's the risk. As more people come into the space, as it becomes more adopted, the returns diminish, right? So you go from thousands of percent per year to hundreds of percent per year to single digit percent returns per year. As the returns diminish and the volatility decreases, more people come into the space. As more people come into the space, the returns diminish, the volatility decreases. Eventually, you get an asset that's returning something very similar to whatever gold is returning over the past few years. It's volatile now because it's mostly used for speculation and there's a lot of risk. But I do believe we will get to an equilibrium at some point.
And whereas, okay, that's a great point because I guess I've lived in the last few years where I saw this crazy hype and I saw news and I saw all these people signing up for Coinbase on their phones and it was trending on the App Store. Those were the indicators to me that it hit a certain level of mainstream, even in terms of interest. But I guess in the grand scheme of population of the world, it was still a small amount of people. Is there any stats on that? Like
there
even
are some
estimates?
stats. I don't wanna mess them up. We can put them in the description after.
Someone smart is Googling it, finding it right now.
There are some good stats out there, but we're still at fractions of humanity. Think how few people have Bitcoin. A good point that I like to make, and hopefully some of your smart listeners will do this. To all my friends, all my family members, right? There are 21 million Bitcoins finite. We know that there are a lot that have already been lost. We know that there are a lot that are held by Satoshi Nakamoto. And we know that there are funds like ours and rich people all over the world that own a lot. So that means the number of humans on Earth who can ever own one full Bitcoin is small, right? It's less than 21 million for sure. Let's just assume it was, let's just say it was 15 million. How impressive would it be? How awesome of a concept would it be for you to be one of the few people that owns one full Bitcoin? If this asset class does what I think it's going to do, what many people like myself and others who have put their careers on the line, who have left jobs, who have committed themselves to the cryptocurrency and blockchain space, if it does even captures a portion of the $7 trillion that are held in gold, then owning one full Bitcoin can be a huge benefit to one's portfolio. So I recommend to everyone, one full Bitcoin, be one of the few people on Earth, be one of the 1% of the 1% that will ever have owned one full Bitcoin while you still can.
Yeah. Okay. All right. I like the pitch. It's almost like you do this for a job, man.
This is what I do.
Well, I guess that brings up, you talked about Satoshi, whether that's one person or several people, we don't really fully know. Essentially, but if we think about the early people that have, let's say, not just one Bitcoin, but hundreds or thousands of Bitcoin, right? And there is a group of people that do own, I don't know the stats again or the distribution, but it brings up the question of, do we have a potential problem of if the price of Bitcoin continued to go up, let's say it was worth $100,000 one day, right? There aren't many people that are going to want to, are in a position to be able to buy a $100,000 asset, let's say, in that case. But that leaves potentially, let's say 1%, since we've used that term in many other contexts, of the Bitcoin supply being owned by 1% of, like, let's say a group of 20 people own 80% of the wealth. Is that not, again, something that could be an issue in the grand scheme of things? Is, and I remember just before we started recording, we talked a little bit about this, and you have some thoughts on this. So just from your understanding, is the design of the cryptocurrency and blockchain gonna find a way to not have that issue, essentially?
It's a valid concern, right? You never want the democratization and the distributed ledger system of Bitcoin specifically. The benefit is the decentralization. The more people that own it, the more people that are part of this network, the bigger the value of the network, the more it's worth for everyone, especially the people who own large amounts. Right now, we're fortunate. Bitcoin is the most decentralized cryptocurrency.
What does that mean, sir? How do you define that?
We know that there are thousands of cryptocurrencies out there, right? So we could take a look at the public ledgers, and we can see the concentration of ownership of coins within those ledgers. Bitcoin is the most decentralized of all of them, which is, and it's also the biggest. So we already know that we've achieved a certain level of decentralization. And we are becoming more and more decentralized as more and more people come into the space. Not everybody has to own a full Bitcoin, right? So when you're talking about, let's assume Bitcoin is $100,000. The beauty of Bitcoin is it's fractional. It's easy to fractionalize. So you can do a transaction with 0.00002 Bitcoin, and you won't necessarily have to own the full piece. Now, while ideal, you want decentralization to exist for multiple reasons. The most important reason is if I owned all the Bitcoin in the world, let's say I own 21 million Bitcoin. Do you really think the value is going to be $100,000, $200,000? The value is only what people are willing to exchange at that moment in time. people say, what is the true value? What is the intrinsic value of Bitcoin? And I say, what did it just trade at? So it's at $8,500. As more decentralization happens, more centralization happens, liquidity goes away, becomes more and more difficult to exchange these Bitcoins. They lose value. So it solves itself mathematically, I believe, hypothetically, by just this concept of more liquidity, more access, more democratization. That's what's going to build out this network. And if someone wanted to massively buy out the supply, if someone was saying, hey, I'm the richest man in the world, I'm Jeff Bezos.
Or a bank. Or
a bank. And
government.
they say, I want to own all the Bitcoin. Well, we know what's going to happen. Supply and demand. There's 21 million of these. It's finite. That's the supply. If a huge amount of demand comes in, then the incremental value of every additional Bitcoin you buy goes up. It becomes more and more difficult to accumulate.
Yeah.
The same is true if you've already accumulated and you want to sell. The incremental value of when you're trying to sell of the next Bitcoin keeps going down and down and down. So there's some scale here. There's some game theory that kind of prevents mass accumulation.
That makes sense. Okay, kind of makes sense to me.
if it does, we can discuss it further.
These are
complex topics.
Definitely, I think from my side, I'm trying to think through. Let's say Jeff Bezos did say, "I really believe in Amazon coin or Bitcoin." Let's say Bitcoin. Let's say Bitcoin for now.
I want to buy them all.
I want to buy them all. Or let's just say even he's like, I realize if I bought all, then the value eventually might not be worth it because no one else has got liquidity. But I'm smart enough to know that if I own a half, I'm going to drive up the price. Yeah. Like, how can that be stopped?
Yeah, you don't necessarily even need to solve for how to stop it. Let's just examine that scenario. Jeff Bezos, richest man in the world, who knows where he is on the list right now, but let's say he is. He wants to buy half of Bitcoins, right? So he says, I want to own 10 million Bitcoins, right? That's what I want to own. The difficulty of being able to purchase those 10 million Bitcoins is so unbelievable. I have Bitcoins, right?
Yeah.
My Bitcoins are held in cold storage. They're not necessarily on the market. They're not available to be traded. So that's supply that's not in the market. He's going to try to buy out whatever's in the market. As he's buying what's in the market right now, people see that there's more demand.
Because it's all on a public ledger.
Price keeps going up, right? So if someone wants to buy, I'm not willing to sell. He has to offer a higher price. I'm not willing to sell. He has to offer a higher price. Maybe he finds some new sellers. He will drive the price up so much that it would be near impossible even for some of the richest people in the world. Supply and demand it's economics 101. Yeah. If we know that if someone is trying to buy everything in the market and there's just not that much supply in the market, the price will skyrocket. We've seen that over and over again in every asset, in every bubble. It would cause a bubble, it would make it extremely difficult for him to buy, and it's just not a sound economic move to try to purchase that much.
Okay. For the sake of time, thanks for explaining that. I think for the sake of time, we'll move on to something else I wanted to discuss, which is going beyond just Bitcoin, just cryptocurrency. Let's talk about something like Ethereum, right? So this is really about the concept of the blockchain is separate to Bitcoin. Bitcoins are on the blockchain, right?
The first use case of a blockchain.
Exactly. So, but I think a lot of technologists see the potential when you hear them discuss what can be used on a blockchain, what's the potential of it beyond just money and currency. They talk about so many different things. So are there a few areas that someone who's following this a lot closer than I am, that you said, oh, that sounds like a great use case? And the only reason I bring up Ethereum is because they have the concept of smart contracts. And when you think of technology being able to automate tasks that previously were done by humans, there seems to be at least some inherent value in that sort of technology to be able to process things, to be able to execute contracts on a blockchain transparently, openly. So yeah, maybe let's start with that, but maybe there is something else that really comes to mind.
Yeah, no, it's a great segue. So Bitcoin was the first application of blockchain, decentralized ledgers. Ethereum is the next level. We talked about credits and debits, which is pluses and minus, right? So on what Bitcoin can do very well, simple computations, +1 Bilal, -1 Ali. Ethereum takes that to the next level. It introduces everything from multiplication and division to if and or statements, right? So you mentioned smart contracts. All a contract really is, or a smart contract really is, if something happens, then something else would happen. Today, when you and I enter into a contract, the mechanism by which we enforce that contract, if there's some disagreement, is a lawyer, a trial, a judge, law enforcement. There is no pure way to enforce a contract outside of the legal system. We have to trust each other. What smart contracts do is they say, if X variable is met, then Y happens automatically, as long as it's digitized and easy for the Ethereum blockchain to read, for lack of better words. We can enter into a smart contract where I buy your house. And right now, when I want to buy your house, have you ever purchased a home before in the U.S.?
No, not in the U.S.
Many of your listeners have. I have. It is complex and beyond annoying. You need brokers, you need lawyers, you need banks, you need title, you need insurance, you need so many intermediaries in order to effectuate buying a house, because I don't trust you and you don't trust me. There's a fundamental lack of trust. Ethereum potentially solves that. We can enter into a smart contract where you say, hey, my house is worth 1,000 Ethereum. I say, okay, great. I accept that. We create a smart contract. The smart contract is pointed towards the deed. For argument's sake, let's say the deeds of where you live are all digitized. So this smart contract is pointed towards the deed and the lot number on your house. Right now, it has Bilal's name on it. We enter some logic into the smart contract that says, should Bilal's name be changed from Bilal to Ali, then the smart contract will release the money to Bilal.
Okay.
So now I don't need to trust you. You don't need to trust me. I put my 1,000 Ethereum into this smart contract, knowing that if you change the name, I will get the house and you will get the Ethereum. You don't have to trust me by, do I have the money? Do I not have the money? If you change the name, will I change my mind? My money's locked up into this contract. It's a smart contract, and it will be released. That's a simple if
and. There's a criteria. So like another example, I was just thinking while you said that, let me know. I'm trying to relay it to you to say if I understood. So let's say I'm a supplier in a factory and I'm a retailer and I get a regular supply of sneakers from Vietnam, let's say, and I have a certain smart contract made to say, okay, every time there is a certain amount of stock that is delivered to this warehouse, let's say, something is scanned that triggers on the blockchain.
Very easy.
And because of that criteria being met, then now the smart contract will pay.
Yeah,
is that something that? Okay.
It's actually even simpler than that. Let's just tie it to UPS. Okay. Right. Here's this web address on this. This is a digital format. Right. Should this say delivered? Then release the Ethereum. You as a vendor, you have no risk to me because I've already put the money in there. You're gonna build these sneakers, you're gonna make them. You're not gonna lose out until if you deliver, right? There's no way for you to lose out if you do your end of the contract. And me as a buyer, I don't have to worry about anything. I don't have to give you the money up front. I don't have to front anything. The money's locked up into this smart contract in your example. And as soon as it's delivered, you're happy and I'm happy, and we don't need to trust each other. Now take that to the nth degree. It can be if and or multiple variables, different scenarios.
Which you would need for a house purchase.
House purchase, insurance payment.
So have you seen someone building this right now?
There are plenty of projects out there solving every single one of these: supply chain management, purchasing of properties, insurance, anything that has a contract associated with it, a contract embedded in it, could technically sit within one of these smart contract platforms, and there's going to be a use case for it. And our minds are the only limitation. We're creating solutions and to problems we didn't even know we had.
Yeah.
Because of this new charities. You mentioned you had worked with a charity before, right? There's some beautiful concepts out there where when I donate to a charity, oftentimes I don't necessarily know what's happening with that money. Oftentimes there is a lot of corruption on the ground. The charity might not be corrupt, but in order to get the aid to a specific group of people, they have to pay off government officials, whatever it is. If I were to donate money or Ethereum into this smart contract, and I can see that it's paid directly into the address of the person who needs the help, I'd be more willing to give more. And if I see some deviation, like why was there a payment made to this government official, or why, one, the government official will not want that anymore. If it's so auditable and so easy that we'll be able to go after them, it kind of curtails that risk. And two, it makes the charitable people more confident and more happily.
And there's more transparency to it. It was something that actually, when I left Charity Water, it was one of the things we actually did. Like, we used to have hackathon every year, and my team worked on a hackathon project for how could we use blockchain for social impact for Charity Water or beyond. So it's definitely there are some smart people already working on this, but I think this is just my opinion. In that particular use case, Charity War has already kind of led the way in showing transparently where the money goes. So they show $12 from this kid's lemonade stand went to this particular project in Ethiopia in the Tigray region, and it was a part of a grant that was $12.17. Like, I'm just making this up. So that was, but when we were talking about, we were saying, well, what if we could make that completely public? Because right now we had to create proprietary software to show that, right? But if there was, if we were leveraging the blockchain to be able to show people that, that would be an interesting concept. I think where I netted out in that particular scenario was I had to say, well, what is the blockchain giving any benefit that couldn't be had by just creating a bespoke system in the first place?
Yes.
Right. So that's kind of where, as someone who's going to then develop the technology and spend money and resources, they have to weigh up the pros and cons. Like anything.
That's a big concern we see every day. So there are those out there who are creating solutions to problems that don't exist.
That's
Not
a great
everything
way of
needs to
putting
be
it.
a decentralized ledger.
Yeah.
Centralized ledgers are fine for so many things. Decentralized ledgers are great when you need that transparency, when you need that lack of trust, but they have their own inefficiencies, right? It takes longer to confirm a transaction on the Bitcoin blockchain because you need so many different people to confirm that ledger. Whereas with Chase, you don't. So you're absolutely right. We have to be very careful of what we're investing in. We have to be very careful of these thought leaders who are trying to present solutions to problems that might not necessarily exist. Blockchain is not the answer for everything.
For everything, yeah. And I think that's a great point, especially, we talked about this a little earlier, but just having, if you've worked with anyone technical, often they are, when I say technical, I'm saying like a computer science person, an engineer, a programmer in this case. Often they are some of the smartest people in the world, but sometimes you can get lost in the complexity of what you've created. Like, I do this, right? Like as a non-technical person, I'll do this as, I've used this example before. People don't know what goes into this setup right now, the cameras and the audio and all the checks we just did and the editing after. And the person listening shouldn't have to care, right? Like, they just want to come. They're being nice enough to give us an hour of their attention or more. They don't need to know all that goes in behind the scenes. But as the technical person who's programming the machine, often you want to tell the whole world how complex it was to capture this perfectly with 4K video, right? Like, I don't need to know what goes in behind the 4K video. I just want to watch 4K video. Do you get what I mean? And I think that is often a stumbling point for a lot of people, not just in this space, but in general, right? Like, anyone who works on a startup or a new innovative idea, you can often get lost in the complexity of what you're doing and really not think about like what the use cases are. And I think we've tried our best to really approach this conversation today to tease out some of those examples. But the truth is, there aren't necessarily, it's too early, right? Like, there aren't all of these things built out yet. It's still very early. So
it's still speculation, right?
Yeah.
We should always caveat that, right? Today, like Vitalik and others have mentioned, we have not earned some of the value that has been garnished in this space, right? So a lot of what's happening right now is speculation. And that's okay. A lot of great technology, a lot of revolutionary things that changed the world started with speculation. The early adopters are the ones that are willing to take that risk. Sometimes they're wrong, and sometimes these things go away. Oftentimes they're not, and those who believed in the internet and really participated in a big way, some people got their faces ripped off, by speculating on things that never got anywhere. But if you invested in the underlying protocols, if you invested in, the real, if the Googles, the actual companies, the Yahoos, the Amazons of the world early on, right? These true tech companies, these true .coms, you would have ended up doing well. It's just hard to pick them, right? And that I think that's a really good segue into what we do at Crescent.
Yeah, for sure.
We don't pick. We built an index. We built an index of the largest, most liquid, easiest to store coins, and we let the market deem what is the best, what is the biggest, what has the highest likelihood of success. The entire market says Bitcoin is the largest, so our fund owns 60% Bitcoin. It says Ethereum is the next, and so on and so forth. We've made it simple to, if you have a view or a thesis on this space, if you want to participate in the entire ecosystem, you can just own it all. We have an index fund of the top 12 cryptocurrencies, going up to 14 at the end of this month. very strict criteria of what goes in and how it comes out of the fund. We rebalance it every month. We charge a very low fee, an all-in fee. And then we give our clients a statement at the end of every month so they know exactly how much money they've made or lost. And then at the end of the year, they get a tax document they give to their accountant, and their taxes are taken care of. So we've talked about all these complexities. We've talked about all these nuances. We've talked about how hard it is to do. What we think we created is a simple mechanism for investors to participate in this ecosystem without necessarily having to understand every single part of it.
That makes sense. I definitely want to cover that off in a little bit more detail in a second. But just the last thing I want to cover off before we go into that and your approach to that is we've talked about Ethereum, and that was great examples that you gave, and the smart contracts. I've heard you discuss Ethereum and the analogy of the App Store. So that is one thing that attracted me to Ethereum when I looked at the array of options out there. I realized, oh, these guys are trying to build a platform. They're not just trying to build, they're basically allowing people to build on top of what they've built. And the analogy you've given in the past, I've heard you talk about, is Apple and the App Store. So could you just kind of share that as well? Like, how does Ethereum differentiate and what are they building that is akin to something like the App Store?
So Apple was revolutionary for many reasons, but one of the less spoken about one is the App Store. When Apple first launched the iPhone, one of the first things they did was open this App Store to be a third-party system where people can build apps. And oftentimes, really early on, you could probably still find a lot of these articles online. They were criticized for it. Why would you allow someone who's not Apple to build an app and monetize some of the use and the time of your users? And Apple's response was brilliant. They said, we can't make it all. There's so many use cases. The value of the iPhone will grow if we have hundreds, if not thousands of developers building on top of our platform. Not every single developer needs to build the hardware, needs to build an iPhone in order to sell a game, in order to sell a tool. We're going to allow people to build on our iPhone, and it's going to increase the value of our iPhones and increase the value of our App Store.
And their ecosystem.
Right? To tie them into that. You and I, we like our iPhones because of the ecosystem. We like it because it interacts so well with our lives. That's the major value. Ethereum does something similar and takes it to the next level. So not everyone needs to build a blockchain. When we talked about being able to buy or sell a house, when we talked about being able to execute charity on the blockchain, there are lots of smart entrepreneurs out there that don't necessarily need to build the entire App Store from scratch, don't necessarily need to build their entire blockchain. They have a use case. They have an application that will use blockchain. They need a smart, good blockchain to use. That's what Vitalik and Ethereum did. They created an app store where, unlike Apple, anyone can build an app on top of the apps on the Ethereum App Store. Anyone can design some functionality that uses the Ethereum blockchain. They can issue their own tokens on top of it. They can release it to the world. They can charge money. They can do whatever they want on top of the Ethereum blockchain. And unlike Apple, Vitalik and others aren't saying, yes, we allow you to build on our app. No, we don't like you. Hey, this doesn't fit well. It's a democratized way to access a blockchain and build on top of it. So it's somewhat beautiful, and we're only getting to the tip of what's possible with it. We don't know. If I tried to explain to you Facebook 10 years ago, you would have looked at me silly. Oh, so it's like a yearbook with pictures and a wall, and you can write on it. No one would have believed that it would be the massive
what it is today.
And that's what's happening in Ethereum. People are building things that we couldn't wrap our minds behind. There are new applications being built that we would have never even fathomed because of the beauty of this app store and the democratization of it.
That's a great summary. I think you mentioned Vitalik there, and he's the founder of Ethereum, one of the founders, I guess. And I referenced this earlier to you before we started, but he had this amazing tweet storm, like a series of tweets in the end of 2017 at the height of the market cap being
Bitcoin was like near 20,000. It was 19,800. Ethereum was, I think, like 1,400.
Exactly. And one of the I won't read out all of these, but if you just Google Vitalik 2017 tweet storm, like, you guys can find it. But one of the things I really loved, he basically said, so the total crypto market cap just hit $500 billion today, but have we earned it? And you mentioned that before. So how many unbanked people have we banked? How much censorship-resistant commerce for the common people have we enabled? How many dApps, decentralized apps, have we created that have substantial usage? And he goes on with that. What I loved about that, and it's kind of wrapping together what we've talked about today, is like the people like Vitalik, like when you hear him speak, I've never met him, I don't know him, but like he seems like someone. First of all, he's like a young genius, right? But he's those are the things he's saying which really make me think, right, that is what attracted me to this space in the first place, right? And when he talks about helping the unbanked, like how far are we from something like that? Like, from your opinion, someone who's following this closer than I am, like those are the kind of big ideological pie in the sky ideas that someone like him is trying to drive with what he's building.
Yeah. The short answer is we're closer than we were in December of 2017. And the market got ahead of itself. There was a lot of hype. There was too much speculation, and very little was built. Ethereum was actually one of the main reasons that happened. The helping the unbanked is a very nuanced thing. It's something that we've always wanted to do, but for a short period of time, and one could still say today, access to venture capital has historically been focused on the US and the UK and developed parts of the world. If you, as an entrepreneur in Bangladesh or in India or in Pakistan or anywhere in the world, had a really cool idea, wanted to raise some money to build a company, it was very difficult, almost impossible. You had to come to the US, you had to know English, you had to come to Silicon Valley, you had to develop and go through the venture capital rungs, you had to know someone. It was the anti-democratized version of getting money for a project. Ethereum of Vitalik actually solved that. Anyone in the world today, what we talked about, you can build an app on top of the Ethereum App Store. You can sell tokens. You can say, hey, I'm building this really cool thing. It's called an ICO. I'm building this really cool project, initial coin notch. I'm building Bilal coin, and it's going to be great. And I'm going to make these podcasts, and I'm going to make revenue off of these podcasts. But I need some money to buy these cameras and microphones. And you know what? If you help me by purchasing Bilal coin now, you'll get to participate in the revenues in the future. That's just one concept. You don't need a venture capital firm to do that for you. You can just go to the Ethereum platform. You can say, hey, I'm going to issue Bilal coin, and I'm going to market it. And if you like my idea, you can invest in me. You don't have to go through Silicon Valley. You don't have to be a venture capitalist. You don't have to be the richest people in the world. I'm coming directly to the people, and I'm issuing a security. I'm issuing a token. I'm helping raise money for a project. That kind of solves what we were just talking about, helping the unbanked. There's so many different aspects and variables to it, but that's just one piece. There's still a lot to build. There's still a lot more to go. I think the market's going to get ahead of itself again at some point. People get excited, too excited. Market crashes, then we build. People get excited, too excited. It's very cyclical. The crypto winter, these past 6 to 8 months, we've seen a lot of building. A lot of the negative aspects have been washed away. A lot of the scammers, a lot of the people, the get-rich-quick scheme guys, either made their money or lost their money or didn't make money. What's remaining is largely, in my opinion, people who are really trying to change the world. People who are building interesting projects, building cool tech, trying to effectuate change and do proper usage of decentralized distributed ledger technology. And that's what gets me so excited.
That's great. You talked about decentralized and changing the world. And when I say those two words, there's a recent news story about Facebook. And there's many people listening to this that sit on both sides of the spectrum on thinking if Facebook has changed the world for good or bad, if they are decentralized. Well, they're not decentralized. But I think what's interesting in that regard is that Facebook has talked about global coin, I think it's called. So just really quickly, like what is that and what do you think about it?
Yeah, very interesting concept. One, it's great for the ecosystem and the industry. Absolutely great. It's a validator, that blockchain is here to stay. These large companies are getting involved. They see the value. They see the great things that Bitcoin and Ethereum are doing, and they want to participate. You mentioned Zelle early on and Venmo, right? That's really only available to people in the US who have access to the banked, right? The unbanked don't have access to Zelle and Venmo, and they have to potentially use things like Bitcoin, which is still kind of hard to do. Something like global coin, as little of it as out there, make every single person with a Facebook account will now have the ability to exchange value with anyone else, right? So instead of me opening my Zelle app and sending you money because you have Zelle, we know everyone has a Facebook account, almost everyone in the world, right? So if it becomes easier to send value to someone within the Facebook network, you're bringing banking to anyone with an internet connection and a Facebook account. So it's somewhat unique. It's not, I've gotten the argument before. Some people have tried to test me. Well, why would I use Bitcoin if I can use that, right? We can go all into the argument of centralized versus decentralized. There's value in both, UI, UX. There are benefits and pros and cons to everything. But the bottom line is an entity like Facebook entering the space, bringing something as cool as global coin to the ecosystem is only a positive, I think, one for the world and two for the industry.
Yeah, for sure. I think anytime a big player like Facebook or Google or anyone gets involved, like you said, it's a big validator. And I think when you think of the traditional banks, the way they've changed their minds, many of them go back 5 years ago, many of them were laughing at it and saying, well, this is stupid. Why would we even get involved with this? To really changing their strategy. And a lot of them are being exposed to it in some way. Thanks for sharing all of that. Talking of being exposed to the asset class, which is what you guys do as a business. Tell me a little bit about what you guys have built. You mentioned earlier about the index fund, essentially. I'll quickly say what I think of it from a third party point of view. Let's say I go on your website. What I think you guys are doing really smart is, if I'm someone who is listening to this, and this is not a pitch, I'm just giving my opinion. Pitch. Yeah, is if I think of my portfolio, right, and a lot of people listen to this and saying portfolio. I don't have a portfolio. A lot of people do have a portfolio, don't even realize they have a 401k, they have cash, they have something like they have
maybe some property.
Their property, exactly. So if all of us think of our net worth, right, whether that's $10,000, $1,000, or $1 million. There's a certain percentage of that you want to expose to more higher risk assets, asset classes. And if someone wants to be involved in this space, right, they can go out like someone like I did or some of my friends have done and just go and buy different Bitcoin, Ethereum, all the other currencies that I'm interested in. But like you mentioned before, I do think there are a lot of people who don't even want to come close to thinking about it, right? In the same way I have exposure to the S&P 500 through my 401k, but I don't go and buy 500 stocks and like rebalance and do all those sorts of things. So I can see, coming from your background, coming from Goldman Sachs, and understanding how that institutional world works, you guys are doing a smart thing, because you're saying, okay, family offices, pension funds, whoever you're going after, big money, if you want to be involved with this, let us do it for you, and we're essentially providing you a service, and we're going to get you exposure to those assets, and it's a smart thing to do. Is there anything I missed out on that? Like, essentially, you're allowing people to invest in an index of the top 20 or 15.
The one thing is, it doesn't just have to be these large, massive institutions, right? So it is for investors too. So anyone who, we have certain rules set by the SEC on who we can admit, something called accredited investors, but it's not that complex.
So accredited investors is a 200K
of income over the past 2 years, or $1 million of liquid net worth, just not including your home. If you meet those criteria, we offer what we believe is the best product out there to get the broad exposure to everything plus more that we've talked about today. You have your Bitcoin, your Ethereum, your Ripple, your Litecoin, all the largest crypto assets, these large digital assets. We manage them in a portfolio. We lock them away in cold storage. We rebalance them every month. We figure out what needs to stay in the index, what needs to be kicked out of the index. We trade them very efficiently. We reduce costs. We tell you how much your portfolio is worth. We do your tax, give you a tax statement at the end of the year. It is a truly turnkey solution for someone who, unlike you, doesn't want to go to Coinbase or Gemini, doesn't want to give all their personal information to these entities and open up accounts, buy these cryptocurrencies, figure out how to trade them, and then figure out how to store them in cold storage. It's a one turnkey solution that we offer to our clients, and very simple to get broad exposure.
Right. And just so I understand, so you guys would just take a fee, I guess?
Yes.
The same way another provider would?
That's absolutely. So we have an all-in fee it ranges from 95 basis points to 2%, depending on how much money you have with us.
So that's 0.95 to 2%.
All the way to 2%.
Okay, great.
Which is the lowest fees of any provider doing anything similar in this space.
Great. And if people are interested, again, this is
CrescentCrypto.com.
not investment advice. This is two guys talking about something interesting. But if you are interested, you can go and check it out. So thanks for sharing that, man. We're going to have to wrap up soon. You've shared so much really interesting stuff today. So thanks for your time, man. No, of course. The last thing I would love to ask is kind of this magic wand question, right? Like, as someone who follows this space a lot more closely than I do, let's say 10 years from now, you have a magic wand and you could say, okay, the financial system is going to look different to today. What would that look like to you?
Very, very deep question. Okay.
That's what we do, man.
Yeah. So I do believe that the systems we have, the financial systems we have today, are archaic. And for the past few years, technology has been trying to piecemeal different additions to make it better. But the infrastructure itself is old and archaic. We can't do a transaction today over the weekend. You can't do it over a holiday. You can't settle. You can't send out money or send securities over weekends. It's almost impossible to send a wire overseas. We're talking about days. I do believe that distributed ledger technology and blockchain is going to make the world more efficient. Now, whether that means everyone is using Bitcoin or not, that's a totally different argument. But I do believe even the existing rails today, the banks, the brokerages, the insurance companies, the Facebooks, the Yahoos, the Googles, they're going to find ways to make the world more efficient. Transactions will be more efficient. We're solving right now. The world has a big issue with trust. It's not clear what's real and what's not. Fake news versus real news. It's a true issue that we're facing as humanity right now. And I do think blockchain technology is going to increase efficiency and help us with the trust issue.
Amazing. All right, man. Well, I appreciate the time, brother. And you've been really insightful. And again, where can people check you out? You mentioned the website, their social handles, LinkedIn.
www.crescentcrypto.com. We do have some social media presence on LinkedIn and Twitter as well. But if anything, if you have gotten anything from this conversation, it's buy a little bit of Bitcoin and sit on it forever. Not investment advice, but from one man to another. This is what I tell my family: own a little bit of Bitcoin.
Great, man. Again, thanks again for everyone listening. This is definitely a topic I've been wanting to learn about in more detail for some time. And I hope we've tried our best to simplify as much as we can, but also talk about the nuance of the different areas in this space. If you're listening to this, you can make sure you go on youtube.com/CreatorLabFM to check out the video. Make sure you subscribe, hit the like button, all that fun stuff. And if you are listening to this but are not subscribed, make sure you go on Apple Podcasts, Spotify, any podcast app that you like, Google Play, any of those things, and make sure you search and subscribe. And if you are enjoying these conversations, it would mean the world to me if you could write a review. It really helps get this in front of more people. So thanks again for being on here. Thanks again to Canal Street Market and Listening Party for hosting us. And we've got amazing guests coming up in the next few weeks. I've had a little bit of a break because of travel and some other stuff that's been going on. But I've got another 5 or 6 episodes that are coming in the coming couple of months. So please make sure you're subscribed and listen out for that. And thanks again, brother. This was great. Cheers, man.
Thanks for having me.